Hello everyone, this is today's video analysis for April 10, 2019. Today we're taking a look at the NZDUSD, the New Zealand dollar versus the US dollar for today's trade analysis. Looking here at the daily time frame, there really hasn't been a significant long-term trend, and really what I'm looking at is if we just take a box here and just kind of bring it out like this, and we can go all the way back here to the left hand side back into November of last year, around where this box encompasses, and we've been bouncing around basically from this pink zone 67.15.30 at the bottom to the orange zone 69.35. Yeah, sure, within there are trends, midterm trends between the top and bottom, but a significant long-term rise or fall really just hasn't happened since November. It's been kind of stuck in that box, and if I bring it out a little bit more, you can really see what I mean by that. Left-hand side, clearly a long-term downtrend, and we've just been kind of stuck in this box since November of 2018. So very interesting viewpoint there. Let's bring it into a little bit more manageable, I guess, area here for the currency pair. I'm going to scoot it over just a bit here. So if you look at it in this viewpoint, we have these black circles here, and I think that's really what we want to focus on. The black circles between the pink and the orange shaded area. Pink again is 67.30.15. Orange zone 67.65.55. And if you look back in time, we can see the market clearly finding support at the pink zone, some resistance at the orange zone, eventually breaking. The orange zone goes higher. We also, right about right here, and I'll just get another circle, the blue circle, and put it right here, we see some support at this orange zone. So we know historically we've seen resistance, we've seen support around the orange zone. It's a significant decision zone. Underneath it, there's potential resistance. Above it, we look for the market to go back up again. We've been studying in the live trade room for the past couple of days, two moving averages here. The 100 is the green moving average, 100 period moving average, and 200 period is the blue moving average. And interesting enough, a few days ago we bounced off of that and started to turn back higher towards that orange shaded area. I think another interesting way of looking at this currency pair is on the 4-hour time frame. Let's get it back into our view here, and we've studied this pattern as well in the daily trade room, where we've seen these. The best way to draw it out here was to recognize between the black and the blue circles. You see up here, after the long fall, we saw the market find support at the blue zone, bounce to the green zone, find resistance, and then fall. Found support at the orange zone, bounced to the blue zone, found resistance, and fell down to the pink zone. Found support there, bounced to the orange zone. So if the trend pattern, that's really what I'm trying to get towards, is there's a pattern within this trend, isn't there? The fall, rise, fall, rise, fall, rise. So the question of the day and the week is, are we going to see a continuation of this pattern where the orange zone, 67.55.65, holds, we target back to the pink zone, or potentially a new low which goes all the way back down here to the yellow zone? That would be basically the repetition of this pattern that's happened two times, and now we're on that third instance of that repetition. So what I'm looking for today is evidence of resistance, evidence that the market's going to continue to find resistance here at the orange zone 67.55.65 and turn around and go back down. We want to see that repetition of that pattern, and there's really a minimal risk here. The risk is that it gets above the orange zone, so any stop loss would be above the orange zone. If you look at the green and the blue and the red lines above there, you can see there was minimal risk. Once it got under the green zone, it never got back above. Once it got below the blue zone, it never got back above. Now we're looking at the orange zone saying once it's underneath there, we don't want it to get back above. So at least right now, one easy determination is we don't buy underneath that orange zone. Don't buy it underneath 67.55.65 because repetition of the pattern would tell us that there's potential that it goes, a higher potential that if that pattern continues, it goes down to the pink zone or possibly down to the yellow zone. And the risk is it gets above. So if you're looking for an opportunity today on the New Zealand dollar, it's more likely under the orange zone. You're looking for shorts targeting the pink and the yellow zone on the way down towards the 67.90 level. Your risk is getting back above 67.65 and it goes higher. If you're a buyer, if you're considering a buy scenario here, wait for it to break above that orange zone. That's really the best way forward for that, is that it gets back above the orange zone if you're going to buy it. Otherwise, looking for the short under the orange zone is the opportunity today for the New Zealand dollar.
From Forex Traders Daily, this has been your daily analysis with Ross Mullins. If you would like to get Ross's analysis on all the currency pairs he's watching and all the trades he takes today, join him in his live trade room by clicking on the link below. Please leave any comments you have about today's video in the comments section below.